What's up, everybody? Chris Dover and Aaron Rennell here. I'll let you do yourself, but I mean, say your name. Do yourself how you want. Market Gaggle podcast. We're thinking of renaming it to hashtag So Hot right now. We got Crypto Derek here. I've taken up the misnomer or the name Crypto Hansel. So we're the Zoolanders over here. And what's going on? This is the we're going to start doing weekly market updates. It's March 22nd, 2021. Bitcoin's only at 528,000 right now, which is undershooting. Ethereum's at 99,000. No, wait, that's next week. All right. What's going on, man?
Yeah, man. What is it? Basically afternoon. Good morning. Good afternoon to the East Coast peeps. It's going. It seems like, similar in the crypto land. We had a similar repeat of the last couple weeks. We had this pump, on Friday through Saturday. It was looking pretty nice, and then just deflated, just rug pulled.
Rug pulled.
Which I mean, I know you're more of a price action guy, so that's kind of your leading indicator, which I ascribe to that as well. But I did see some interesting news about Coinbase. It looks like the CFTC fined them. It's actually not that
like
much,
10 or 15 million, something like that.
6.5 million, which it's not much to them, but
$100 billion IPO. Yeah.
Yeah, like it's a drop in the bucket, but it seems like they're going to have to postpone for a month. So I don't know. I mean, obviously that was the only news I could find that was super significant over the weekend to the price action. But yeah, I guess we'll have to be waiting another month to see how that goes. I know there's kind of a narrative out there that people are kind of like thinking that could be a catalyst to another bigger move. So, we'll keep tabs on that. Could be, could not be.
Well, if we break down what it could be, if they raise $100 billion and they say just think they've got up to $100 billion to put in their treasury. And they're of the most skilled in the entire space to determine what assets of current publicly traded companies to determine what assets are worth having on the treasury or even used in the P&L. Like $100 billion, what Tesla did, $1.5 billion. We've got Sailor up $1.5 billion, couple billion now. If Coinbase does throw some of their balance sheet, I mean, it's pretty much a given that they're going to do that. It's just how much that they're going to do of that. And also how many Coinbase shareholders are going to, exit on the IPO and where are they going to put their money? They're probably going to throw it back on Coinbase and, ape into everything else. And, buy a house or two and a couple jets, but still all that extra money, they're just gonna, so I think that's probably going to be a pretty big swoon. The thing about it is they're in the Bay Area, mostly, though I think I definitely know they're in the Bay Area.
Yeah. The headquarters for sure.
Yeah. And they've got a lot of just the mindset in the Bay Area is you just want to get into investments like, Coinbase in 2017, probably 2015 is when you were able to get in. I have a friend, his wife, she was employee 2000 at one of the companies they IPO'd this year. And employee 2000, not employee 20, employee 2000, she walked away with single digit millions. In addition to her $500,000 a year salary, cushy job. Like there's so much capital sitting in the Bay Area right now, or, whatever have left, but of that mindset. And they're just going to be aping in, I think. So.
Yeah. There's been a number of big tech IPOs. I mean, even recently, like a big one was, it's funny, it's Roblox. I don't know if you've heard of this company, but it's a huge game. I mean, I was just reading up on it. Like I look at tech stocks other than crypto and other stuff. But I mean, this company basically enabled video game creators to make like 300 mil, I think, in revenue during the pandemic. And, you know, they're coming out, they're at like a $40 billion valuation, which, I mean, it's kind of big. I'm not going to rush into buying Roblox, but I mean, that kind of stuff is just really cool. And I mean, I was reading, you know, Andreessen must have made a few billion off that one because they were early investors, and Andreessen is a huge investor in crypto right now. Their A16 one, I think, is, I don't know if that is that one separate from the main fund. A16Z, I think, or something like that.
A16Z is Andreessen Horowitz. It's 16A Andreessen Z, and then the number of letters in the middle is how they came up with the name. But they've got multiple funds. Chris Dixon runs their crypto. He's the PM on the crypto, or the general partner. I'm not sure how, but he's pretty much known as the main guy, and he pretty much, he aped in as the PM in 2017. He just kind of said, look, I'm done with doing any other technology. Crypto's my show. And he'd already been a very well-established and well-respected founder and technologist going into that. So they've been plugged into the outside of, you know, like Pantera, which is a strictly crypto fund, and a few of the others. I mean, as far as which big name, and Andreessen is definitely the biggest name that's in crypto.
Yeah, that's honestly really good to know. I'm going to go look up Chris Dixon, find out a little bit more about him. Sounds
I'm sure you've read his stuff. He puts a lot of stuff
I would guess I've read it inadvertent. Oh, sorry, there's a fly.
That's what literally that's what that thing is up there. It collects. There's none on it. Well, there's little, like a baby fly. You've got dream catchers. I've got fly catchers.
Yeah. No, I have some. They're hidden. I don't even want to show it right now. You know, everybody's been growing plants inside their houses since the pandemic. Makes the flies hungry. But back to crypto. Another thing from the last week, Morgan Stanley actually has come out pretty heavily into the crypto space. I think they're partnering with Galaxy Digital, which is Mike Novogratz's company based out of Canada. They're on the stock market. You could buy their stock right now. FYI to anybody out there, ticker is BRPHF. Not a plug. I don't actually own any shares. It's a great company. But regardless, they're partnering with Morgan Stanley for Bitcoin custody, which is pretty big. And honestly, most of Mike's fund is Bitcoin. I think it's probably like 80-90% Bitcoin, even though he's pretty into DeFi now, especially into like this Luna project. He's probably, you know, made a killing off of that, I would guess. But yeah, and then I'm also hearing Morgan Stanley was bidding for a Korean cryptocurrency exchange called Bythum. It's kind of a rumor, but even that kind of rumor, I mean, it makes you think, right? You know, they're seeing the urgency right now to get into the space, and they're like, what is the quickest way for me to get in? Oh, I need to acquire some infrastructure, like an exchange. And I assume, you know, if you grab up an exchange, you also get the coins on the exchange. I don't know. You get some of their reserves or something like that, potentially. I don't know. These are kind of some musings on that, you know, why you might want to acquire this kind of infrastructure. I don't know what you think on that.
Yeah, I've been into the, you know, my previous life. I definitely have built software products that connect with NYSE, NASDAQ, all the different exchanges. So kind of understand how the companies work. And a lot of those companies they do their own market making, or they do their own, like Tether, for example. We know Bitfinex they mint a bunch of Tether from time to time. And theoretically that it's, I shouldn't say mint, they take in a bunch of cash and turn that into Tether. So similar sort of scenario could be with the exchange, what they own. You know, and you got to think that if you're running a crypto exchange, probably a lot of what you're doing needs to have actual a lot of the assets, but certainly owning an exchange would make it a lot more useful. Yeah.
Yeah, no, I mean, and I was talking to a buddy about this too. South Korea, at least in regulatory wise, is more similar to the US than other Asian countries. I'd need to like think about this more. I don't have all the facts, but I think that is probably true in at least regards to crypto, because I think it was back in 2018. There was kind of this like false pump in the market. You can go pull up the chart of Bitcoin and look at 2018, and it was mostly Korean buyers that went into 2018, and I want to say 70 to 80% of them lost massive amounts of money. So this led to Korea, tightening regulations a lot on crypto, because, back when it started, they were very bullish on it. There was a lot of Korean buyers in the market, and because they got wrecked so hard, the regulation came. So, I don't know if that's foreshadowing of something that could happen in the US. Hopefully not, because I think, a lot of the exchanges are pretty careful here, considering like, we've one option for margin, really realistically. Though you can leverage up on Ethereum a little bit. It's still, there's no 100x products or whatever. It's more of like the loan, taking a loan against your crypto type leverage versus I'm going to lever up 100x on my position on Binance, and you get one downtick and you zero out your account or something like that. But
yeah, there's no other. I mean, pretty much you're looking at 4-to-1 leverage in the United States anyway on like equities, and you really have to have a certain dollar limit to be a account balance to get decent leverage on Forex. So allowing 100x on crypto is something that just it doesn't work. We used to get 100-to-1, 20-to-1, 100-to-1 leverage in equities and things like that years ago. But yeah, after the .com bust, that got regulated away pretty quickly. And so with with what we have going on here and how slow like the ETF is still no ETF here. Shout out to our Canadian friends who've got one. I think and Skybridge actually is trying to get one out. Anyway, I can't imagine that the best thing we probably got on leverage would be futures on BTC or ETH on the CME. I think that's probably one of the best spots outside of something like Kraken, which gives you 24/7, right?
Yeah. I mean, and I don't know, and you have to be institutional, right, to trade on CME or something, or there's no barrier. Like if I wanted to just do it, I would just have to have the capital, basically.
Yeah,
cool.
Yeah. So just for two of the downside. Well, let's just talk about downside of trading futures. The futures on Bitcoin, just one contract. I mean, I think it was like $8,000 margin you needed to have per contract, but that was like, I want to say like 6 months ago. So it might even be in the $10,000 or $20,000 range now. So that's one downside. And obviously the other downside is it closes every day for about 2 hours. The CME closes at like 2:00 Pacific time for about an hour or two. And also Friday night until Sunday afternoon, it's closed, or Friday afternoon until Sunday afternoon, it's closed. So you have a move like we had over this weekend, and we had a big up Friday, big up Saturday, or wake up Saturday morning feeling pretty good about yourself, and then blink, and then it kind of like it, Sunday spot Bitcoin spot opens up or is trading at basically where it was on Friday when futures closed. So I'm pretty certain that there's some good hedging going on. Now, if you can get access to perpetuals, that's a different story. But just quick back to all you would need to do is open an account, like TradeStation or Interactive Brokers or, TD Ameritrade, something like that, and just get a futures account open there, just like you would trade the NASDAQ, the S&P. And the Bitcoin is one of the contracts, but yeah, there's a lot of downside. It's very expensive. You can't trade fractions of a contract. If you wanted to buy $1,000 worth of Bitcoin futures, you cannot. If you wanted to buy $1,000 worth of Bitcoin, you can. So anyway, but there's definitely traders out there who probably hedge funds and whatnot of traditional markets that do trade it so that they have some exposure.
For sure. I mean, that's honestly just good to know, because we talk about so many different, we talk about exchanges a lot, and we talk about, trading on a DEX like Uniswap, but, it's good. I didn't even really know that, because I have a TD account. I could just pull up that contract if I really wanted to.
Mm-hmm.
Doesn't sound like I really want to, I'm gonna be honest, but just because I've had a little experience trading some CFDs on FTMO.
Mm-hmm.
Plug for prop trading firm FTMO. They have CFDs on Bitcoin, ETH, like Dash, XRP, and like
and those
Litecoin.
trade 24/7.
No, so that was
they
what I
close
was
on the
gonna
weekend
get
too,
to.
huh?
So this weekend, right? I'm not running like a full account. I'm doing simulated accounts, just practicing until I get to a level where I feel confident. Because prop trading is hard. You're gonna need to get 10% a month, and that's elite level trading. There's only a select few that can do that. So why rush? Which I think is something that you talk about a lot. Like, it's fine if you want to get prepared. If you need to do those, you need to do those reps before you just, take the full step. But back to the contract. I know you probably have a point on that, but I was just going to say, over the weekend, I was trading it, and it right before the big move, they went on a break for 8 hours. Like, literally the contracts paused, and I was holding my position, right? And I was like, I couldn't do anything. And
the CFD.
Yeah, the CFD, I was holding it.
Okay, so you're saying that the CFDs do trade 24/7. It's just that they break?
They more or less, like, Monday through Friday, they trade 24/7, right?
Mm-hmm.
I was looking, they have the hours posted on their website. You can go look it up. It's it's in GMT, of course, too. So, nice conversion. But I guess it's on my chart already. But yeah, they take a break for like 6 hours or something, which usually is while the big move happens. So, weekend trading also, can be a little risky there. I've had that happen to me, honestly, the last couple of times I was trying to trade a big move. So it is what it is, but you just have to live and learn there. Luckily, it's a simulated account. So, if I mess up, I'll just start another one and get back to it.
Yeah. Let me ask you about ETH miners using bots to front run Uniswap trades. By the way, Uniswap put in a nice move today for the last month or two. Actually, whatever. It's always running.
It's a monster. I have many things to talk about on that front. But yeah, no, it's something I don't think it's like a big deal, but we talk about bots and algos in traditional markets a lot. And I honestly don't hear about them as much, in crypto. Well, it's kind of just a given that they're used, but this kind of technique that miners have been using, it's sort of just like they're calling it a sandwich technique. So there's like, there's two transactions that are sandwiching a normal person's transaction. And, on Uniswap, you have to maybe use different slippage tolerances, which is, you use that in traditional trading. You have to know the slippage. So the problem with that is, like, because a lot of things, liquidity is iffy. If you're trying to trade like a very small coin with small liquidity, you might have to go above 5%, which is already way too much. It's already not very recommended when you're trading. So if you go above that 5% threshold, there are these like bots that the miners have been using to make up for the money they're losing on mining fees, essentially, that will sandwich your transaction and just front run it. And essentially, I don't know the full we'll post the link to the article so you can get the breakdown, but it's fascinating, this technique they've cooked up to make up their losses. And if you're a small trader, you got to be thinking long term when you buy something on a DEX right now, because you're gonna just get front run by these bots left and right. I've been finding that too. You think you're getting a lower bid, and you bid up 5 cents or something on your bid real quick. So yeah, I was wondering what was happening, because there's been a lot of weird activity down there. So good little find.
Well, and this comes back to what we talked about last weekend with like the amount of beautiful minds that play in that space. They're just gonna figure such like nuance out that I need some ETH. I'm gonna wrap some Bitcoin in ETH. You're gonna think you're moving the biggest mountain in the world, and all you're doing is just paying $500 on a $200 $500 transaction fee on a $200 transaction. You didn't even realize that you were about to do it, because they just suck. There's just so many ways that that opportunity like this that the miners, that everybody takes advantage of. And with EIP 1559, so I think we talked about it last week too, with the miners are looking to do a show of force April 1st. It seems like the really smart miners are getting, this kind of, I don't even know how this might affect 1559, right? If miners suddenly realize that the biggest boom in the world was ETH mining, they did that, and then they discovered, oh, well, we're losing that, so staking's where we need to be. Oh, by the way, DEX trading is like decentralized exchanges is where, not for you, but for everybody, is where everybody, there's so much opportunity, and they'll just look at that stuff, and they have all that. I mean, it's slow right now too to update. It's really slow. But yeah, I mean, it's a crazy world when just the incredible stuff that we get to see happen in this space, and you don't know the consequences of your action. So one of the biggest issues I've seen is, a smart, well-meaning project will release their white paper and, do some sort of token drop or, some sort of thing, only to have it like all wiped away by, a simple exploit with a smart contract or something. And that's what we're seeing.
Yep. It's there, you give, what is it? You give them an inch, you take a foot or something. I don't know if that's the right one. Close.
Give them an inch, I'm taking a mile. Let me use my age as a benefit.
I walked a mile in the snow to school. That's what my dad would say.
Uphill
he really
both
did
ways.
Do that too.
Well, yeah. Everybody walked to school when I was growing up, but
it
wasn't that big a deal. He just walked.
Nope, not at all. One tidbit before we get into the main discussion, just we're talking about DEXs. I mean, wow, like, Uniswap has about $5 billion in liquidity right now, which is amazing. Up from 0 2 years ago, I would mention.
Right.
If anybody is wondering about these numbers, everything was 0 2 years ago. Same thing with DeFi.
Yeah.
It's at like 5% of the total crypto cap now. It was 0 2 years ago. And, in the last 24 hours, we had over $1 billion volume on Uniswap. So even with, the high fees and whatnot, people are still on there trading because of that massive opportunity we're just talking about. I think we've probably got to our main discussion.
Well, we're up $500 million in the DeFi Pulse Index since last week. We're at 43.1 billion last week. We're at 43.6 billion right now. So $500 million has joined DeFi in the last week. Which to clarify what that means is like $500 million has bought in any of the DeFi tokens, wrapped something. I think we had a trade. I'm not going to release it because it was proprietary, not mine, but one of our traders. And I'm sure I don't know if he'll mind if we put it out there, but he put together a pretty unique trade that's paying out over 90%, I think.
Yeah, I mean,
Incredible.
the opportunities are astounding. If you're, maybe that person will come on and talk. I'll let him be anonymous for right now. We can't let all the secrets out. But I basically he didn't have like a huge amount of knowledge of the liquidity mining and the staking, but obviously very smart, and he figured it out very quickly. Just taking the time to look into it. So if you have a mind for finance, it's not necessarily like foreign material. You can look into it and you'll be like, oh, this is similar to this, and I've heard this term before, and you can connect the dots and find opportunities that way, for sure.
It's true. And look, it's you don't have to have the answer today. Like,
Yeah.
It's if you learn today, you're like 2 weeks ahead of somebody, or 2 years ahead of a lot of other people. So just getting in and starting to learn, just take a little bit every day. It doesn't really mean, you don't need to be a developer. You don't need to be a physicist. You don't need to be an economist. You can figure this stuff out. It just takes a little time. The cool thing is there's a lot of people who are very helpful. So many people build in the open in the space, whereas that is like, they show their work while they're doing it. And because you get feedback that way, and it helps grow it. So it's a really cool space. Let's see. DeFi users over time is the last thing.
Oh yeah. We'll share. We'll share this as well. We kind of talked about this. We were just touching on this a little bit, but up from 2 years ago, we now have over 1.5 million users in DeFi. It's just straight up into the right, and we'll post this, but you can scroll down and you can see the growth of different protocols. But like we were saying before, over 1 million of those total users are from UniSwap. So it's like 90% of the users in DeFi are pretty much on UniSwap. Not saying that other protocols aren't being used, but it's a smaller number because like something like Aave or Compound, which is Compound's the number 2, which doesn't surprise me at all. It's been around for a very long time, and it's a great project. But something like that, you're doing lending and whatnot, and that requires more money, capital up front to do. And UniSwap, it's like anybody can go in there and do a swap. It's real easy. Doesn't takes more than 30 seconds, real quick.
Yeah.
This is a great website too. Dune Analytics. Check it out.
DuneAnalytics.com. They even got the .com and didn't do .xyz or
that's
not that that's bad.
No.
But, so.
And there's tons more data on there. That was just one I was looking at. I was like, oh wow. The uni dominance is just so crazy on this DeFi run.
Yeah, it is.
It's clearly the leader of everything at the moment.
As another one that's really interesting that we got into was Kusama.
Oh yeah, I was gonna have you mention this. It has been on a tear.
We got in at like I'm gonna say 2:30. I don't have it pulled up. That got up to about 450 today. While everything else in crypto has just kind of been sitting around. Binance and BAT has done we did pretty good on BAT too. We didn't do anything with Binance, but DOT, which is interesting because Kusama is a test net to DOT, or a side chain.
Yeah, you're right.
I mean, test net's probably the right word there. So before you can get released onto Polkadot's chain, which is a level 1 or a layer 1, you got to prove it through Kusama is the way I didn't like dug into it too much, but
I'll be honest, like I know the spark notes of it. Like I know that there's this thing, I mentioned it on the last podcast. There's this thing called a parachain auction, and trust me guys, like I don't know full details about it, but I know that it's important, and it's probably why the price is going up right now, because so like I think in the Polkadot a Polkadot network. There's like nodes essentially. And that's what they're auctioning off. And a node is, it's a fancy word for just like an in and out of the network. It's where the transactions and data goes through. And if you're someone that has a large part of this node, you're getting transaction fees or staking fees, or I think it's just staking rewards. The more of it, the more rewards you get. I think that is what it is, and I think that's why most people are trying to get in on it. And obviously, people are going to buy more Kusama because of that, because they want more Kusama. And also, one thing about Kusama is the supply of Kusama is the total supply is only like 10 million versus DOT is like a billion total supply. So like, you can pump DOT can easily go to 1,000. At this point, it wouldn't surprise me at all. And you heard it here. It's still 430. So.
You mean Kusama can go to 1,000?
Yeah. Sorry, Kusama could go to 1,000.
I mean, I'll take DOT at 1,000 too.
DOT can do that as well. May take a little longer just with the supply, but Kusama with that supply can just rip. I mean, as we've seen it, we talked. It's doubled.
It's doubled in a month or so.
Crazy,
And 1,000 is a double from here, so it's not. And also. The first breakout was 100, and that we started noticing it in our work here, so it's already at 437 right now.
It's crazy. It's like you think back and you're like, wow, I obviously wish I took a better look at that one like 2 months ago, but it is what it is. If it keeps going up, it keeps going up. You stick with it. I think that's one of your main techniques too. It's like you're adding to this one probably on dips as it goes higher, or until it proves it's not going to go higher anymore. I would think.
Yeah, we're which gets into the discussion we're going to have today on the core portfolio versus chasing alpha, and how we do that. But it's Kusama. Also, it pays 12% on, so it pays 20%, but you can outsource the process of loading up your MetaMask and then staking and going on to an exchange, doing all the work. You can outsource that to Kraken for 8%, which if all you ever want to do is just say, I'm going to buy and stake Kusama, you just doubled your money in that period of time. And also you've made 12% on top of it. So it's the easiest trade in my mind. It's probably the easiest trade out there right now. And, who knows if it dies out. At the moment, it's looking like it's still running. It tries to die out and then just powers higher. And I think a big reason of that is probably because it's on the exchanges and easily stakeable, as opposed to a really highly complex, easily escapable situation like these, really complex pairs that people are putting together. This just click. All right, I'm exposed to DeFi, and I can go back to doing other things.
What a great easy opportunity right there for people. I mean, it's really. I mean, sure, it's trading. If you're a technical person, sure, go through the do the research. I'm sure you can find literally a YouTube tutorial video on how to do it. Just follow it. It should be easy enough. But the Kraken thing takes 2 seconds, probably. I mean, all right, 30 seconds. You got to buy it, stake it, whatnot. But pretty cool opportunity. But getting into our main discussion, I guess. Kusama would be more of a I want to say that's more of a chasing alpha play for you, right?
Yeah.
Versus your core portfolio, I would guess.
Yeah. And so let's get into the idea of so you're in crypto and you're seeing Kusama rip right now. So what are you doing? I'm aping into Kusama. And guess what happens right about that time? It's about when things die out and it just levels out. And so you buy the top and now you're just sitting there. And then you look over and you see UniSwap ripping, 5% right now. And you're thinking to yourself, oh, wow, that's probably going to do another one of those 10 or 20% days. And so you jump into that one, and then it sits there and does nothing. And then you watch another. And so you continue to just like crowd around these tops, and then they dip. And so, if you're cool with knowing that, generally speaking, in this sort of market environment, there's two ways to go about it. One, it's just be in, right? Like if you could triple digit Bitcoin, if you just bought one Bitcoin back in 2016, 2017, even, you was still there. That thing's gone up to we're about 60,000 right now, 55,000 or so. That's core portfolio. You want to get into those big names that are already we didn't know Bitcoin had already won until you're sitting at 56,000. Suddenly you're like, and then, Michael Saylor did his thing and you're like, excuse me. And then Elon and Square, and suddenly you're starting to see it. So now the question, when you see something like Ford's, so Ford did a $2 billion convertible offering last week, took their stock price down, but they doubled in the last 6 months. So the question there is, are they going to put some on the balance sheet? Right. So it's no longer a question of, is it even feasible for, the companies to put Bitcoin on their balance sheet? Now it's more a question of what companies are going to be doing that. When somebody does an offering, are they really going to be doing that? So the Bitcoin story as a core portfolio, you put it in there, because what we know is that it's, you can't, you can restrict it as a government, but you can't restrict it. Like you can't, where are you going to go seize the Bitcoin? You're going to break into every single house and, go into people's, it's just not there. They've tried to ban it in China. They tried to ban it in Korea, I think, in Africa, in Venezuela, and recently in India, and it's still there. In fact, in Venezuela, I think it's Venezuela or Argentina, it's the most used currency there, because they, and they've banned it. So, and maybe I'm just getting that off a bit, but so we know that Bitcoin's going to survive. So you want to have, as far as a core portfolio is, you want to know the ones that are winning and are going to win. And you're doing it ahead of everybody else right now. There's still a lot of people that are going to need to get it. So, for a lot of people, the opportunity of owning one Bitcoin, which is arbitrary, it's nice to have one Bitcoin, or a nice round number, but you can, use $3,000 to get Bitcoin. You don't need to have one. Ethereum, same sort of thing. We already know that we've got two worlds, really. You've got just the store of value, which is what Bitcoin has become, and a very trusted, in the sense that it's the honey badger, right? It's been beaten down and attacked, and they've done everything they could to try to take it down, and they can't. And so with that, you have something, you're good. Now, Ethereum, that's a second level to it. It's its own blockchain. It's got smart contracts. Bitcoin has smart contracts. There's a number of ways to do all these things as well in a separate one. But in general, what you want to look at is probably your core portfolio, at least Bitcoin, and then add the other big caps. And for me, it's about 75% of my crypto, at least, is in Bitcoin and Ethereum, and more in Bitcoin than Ethereum. And so that's my core portfolio. I have some DOT in there as well as a core portfolio, but that's, so I think of things as like, okay, we're going to be in 1, 2, 3, 4 week rotations on one, I guess, on the alpha side. And then we've got the other side of it, which is the core portfolio, where I'm just, I was just holding it there. I can borrow against it. I bought art with it last week. You can do a number of different things. And soon with Blockfi, we'll be able to have a Visa card, a credit card, not just a debit card, which is pretty good. Monolith does give you debit cards. I think Gemini has a debit card. I think Coinbase has a debit card. But what we'd rather have is credit, because it's dollars and that's cheap. So core portfolio, the idea is you're just in. No matter what, you can't make mistakes with a core portfolio like that in a massive expansion of a new technology like this. Much like at the beginning of the century, being in, you know, Microsoft, Amazon, just kind of, well, it was hard to know who the winners were then that are still the winners. But, you know, being long the NASDAQ, I guess, is probably a better way of saying it. It took a while for that to play out, but it did. Now, so that's smart beta. That's my friend Alex from Macro Ops. His portfolio structure is smart beta with some alpha on top of it. And so what he does is you're rotating into the massive trend, just the big story, where you don't have to be a genius, and you're gonna darn well save yourself from being for being a detriment, or, you know, making mistakes. And so that's the idea of the core portfolio. And then in the alpha, so what alpha is beta is you're just participating in what the market gives. So if I was long the NASDAQ's up whatever 1.5%, 2% this year, my beta is 2%. On top of the 2, what I make is the alpha. And so if I made 10% and the NASDAQ made 2%, I generated 8% of alpha. And the way we do it at the lab is we pick a basket of a certain type of asset. Usually we're looking for assets that have held up during recent weakness and have consolidated, but haven't been as weak as some of the others. And then we buy those, we wait a few weeks out. We want to be in when they're not moving. So we want to be a week earlier. So, and then those move. And as those move, like Kasama right now, like BAT, basic attention token, like UniSwap, they're starting to put in their move, or they've put in their move. So a lot of what we end up doing is taking all the profits from there and keep our core position and roll it into the next batch that hasn't moved yet. And for us, that's how we take on alpha. Now, sometimes it's just ripping and roaring, and, you know, all you can do is you just sit there and let it all go. And that's, I guess, the difficult part of the job. But a small portion, 25% of my crypto asset allowance, whatever, is in the chasing alpha. And because it can grow really quick. We don't put in, you know, you don't put in 10% moves as a norm. You're putting in 50, 100, 200% moves. So, you know, let's say you have $100,000, you put in 10 to 25,000 across, you know, 5 to 10 of these assets, these different projects, and at least half of them end up, right now, our current position, half of them have put in multiple, 50, 100% moves already. So half of 25,000, so you've already made 50%, and only half of your portfolio has really started to move. So that's where, you know, it goes. And another thing you could do is just take profits and swipe that over to Bitcoin and continue to stack sats, as they say. So that's how I'm doing the core portfolio and chasing alpha. What's your thoughts on how are you addressing? I know you're a little bit more in the weeds than me on some of these.
I would say, you know, the best way to say it is, you know, I'm 29 now. My risk appetite is just way different as a 29. I mean, it's similar to you, right? You were gambling, right, around that time when I forget. I think you had some stories, but right, my risk appetite as a younger person is a little different. But also, like, I did start just buying Bitcoin and Ethereum. Like, I didn't immediately start diving into DeFi. Like, I just started when I started getting back into crypto, which was just over the summer, like feels like a million years ago, but over the summer, I mean, it was just like obligatory. I'm like, I'm gonna buy some Bitcoin. No, I don't own a full Bitcoin, but I'm gonna put some money there. I bought some GBDC, some spot. It's nice you can buy the GBDC in the retirement account, but I would like the ETF. It's been lagging behind the actual asset recently, which has been pretty disappointing. But I'm still up, I think 300% there. So I really can't be mad, even if something goes wrong. But so I always kept my Bitcoin allocation, but something I started doing. Well, I did a lot of degenerate stuff for a while, I'll be honest, like just trying stuff. But again, I think I mentioned this last week. It was easier for me to try things even 6 months ago because the fees were down. So like it wasn't eating into my costs the same way. I was able to kind of at least learn how to do stuff without getting totally wrecked. But I slowly began to recognize that the narrative between the DeFi narrative was just so strong. Like, if you look back, I mean, Aave is probably one of the leaders there next to Uniswap. That's probably my biggest winner. Basically, if you look back, there was
talking about it.
Yeah, I'll give you the story now. I went back and kind of like looked at exactly what I did. And I was like, wow, you killed that one, pat on the back kind of thing. But so there was a big blow off top after the summer. I think it was like in August on pretty much every DeFi asset, all assets there. And it was pretty much 2 full months of just bear market, essentially 2 months of just, it was, if you look at any of the chart, it's all red candles until like end of October, I want to say early November. So I waited, I was trying to get long, but like every time I got long, it immediately went against me, and I was just like, no, it's not the time, like I'm gonna wait. And luckily, just from being in the group, I do work on some like more longer term systems using like a weekly chart. It's which I've gotten some influence from Stan Weinstein and O'Neill. We all know O'Neill. He's God with the charts. So I took some of his like I was just looking for something in a base. I was looking to buy something, in a basing period. But also like I use a moving average to give context to the move. If it's below the moving average, I mean, I could buy, but I'm not gonna just like buy, catch the knife. I'm gonna wait for obviously like a bullish reversal there, a really big, I mean, it's funny enough, a really big bullish candle is what I'm looking for to start getting long there. So I waited, and I eventually started getting long on Aave around $40, I realized back then. And I was buying all the way up to 80. And my average was probably still like 50. Just from the bulk of my buy, luckily left was like around $40 to $60.
Trading at 358 right now.
Yeah, trading at 358 right now. I think it hit like 600. So there was my 10x. I mean, I'm still up quite a bit there. So that one move, and granted, like I had a good amount of ETH on top of my Bitcoin. I put like half my ETH into Aave at that point. And then I was kind of like considering, I want to put maybe not all of the rest of my ETH, but most of the rest of my ETH into something else around the same time. And it was funny enough, I was looking about, this is a miss though for the core portfolio. I had bought, I put half of it into Uniswap, and I had put half of it into SNX synthetics. Ended up buying synthetics around $6, Uniswap around like 350 or something. And I look back, and the next day I had some reason swapped all of my Uniswap for synthetics. I don't know why. Maybe I just felt like I had to go 50-50. I was like scratching my head. I was like, man, I must have been really that bullish on. And I'm still pretty bullish on synthetics. But again, I was like scratching my head because, that was, I essentially getting myself out of like maybe 10, 20 grand profit overall. So You know, we all make mistakes. I mean, obviously I'm still up like 3-4x on synthetics. I mean, by traditional means, that's great.
It's funny, huh?
You know, but you know, I'm over here like, wow, I really like basically threw away a 10x though in the short term.
Sure.
Now synthetics can still go up that much, but getting back to that, I do view DeFi stuff as a core portfolio. The reason why I kind of like really am bullish on projects like synthetics or Aave is they've been around for, granted, 2-3 years. By traditional means, that's nothing, I get it, but in crypto, they had to go through the bear market, which was really hard for everybody. You know, that project was 20-30 cents in 2018, and Carter probably was one of those people buying it. I know he talked about it a lot, but he's probably one of those people buying it under $1, and getting into that. And it changed a lot of people's lives. And I still think like Synthetics' mission is like, you know, permissionless, frictionless trading. So, you know, ultimately you could be able to trade anything on there that you want at a certain point. But, you know, I mean, because they were able to get through the bear market, they've just shown so much strength and you know, resilience to get to that point. And I don't think they're going anywhere. The amount of money tied up in a lot of these top protocols is just, it's immense, and there's support there. They might be reasonably valued at the current moment, but I honestly don't know. I think there might be another re-rating of the protocols at some point. But yeah, you can see like I kind of viewed my core portfolio a little differently, but like I never disrespected Bitcoin's narrative in the overall scheme of things. And I think, you know, there's a bias towards that, but anybody that would ask me, you know, what should I do? I just was like, hey, just buy some Bitcoin and Ethereum and call it a day, you know, unless you're gonna unless you have some experience or you really want to get into the space. But I do chase a little alpha in smaller projects, and I do view it similarly. Like I'm not putting more than like 2-3% of whatever capital I have available into those, which, you know, is in relative to my core holdings, it's not a lot. I had another win there as well. I mean, but the thing is, I approach things a little differently than Chris. Chris is, you know, he just got long immediately, and then he has a very systematic way of trading his alts. For me, I actually just get long. I look for maybe a base or something. I try to buy in a base, and I get long and I stay long. You know, the selling part is obviously a lot more nuanced and harder. I don't know how you necessarily view it. I'm not rushing to sell now, but I mean, obviously the chart is going to give me some indication at some point where I'm like, okay, it might be time to part with these coins. So I mean, I hope I touched on kind of my perspective a little bit, but that selling point is actually very interesting and something that I've been meaning to explore. I don't know what you think there.
Yeah, it is hard. It is taking profits and you know when to sell is always something that that's always something that people have issues with. That's probably one of the hardest parts of not having a systematic approach to trading, and not having maybe experience. I don't know if that's the right word, but it is definitely one of the biggest challenges is when to exit. Having a thorough understanding of price action is kind of helpful. The cool thing about crypto is it respects technical analysis a lot more. In the more bigger symbols, like if you're on a, you know, like there's 10 tokens traded on your 80-cent shitcoin, then your technicals are not going to be that useful. But if you're in a fairly liquid, you know, top 20 maybe of assets, and that could even be not just top 20 in market cap of all, but top 20 of DeFi you could look at, or however you want to break it down. But when the volume is well, when you start seeing capitulative volume spikes to the upside, and some price action that shows you toppiness, you don't have to sell it all. That's kind of the other challenge with, we're in a unique environment, right? We're in this massive crypto expansion. There's 25% more US dollars printed in 1 year. Like that, there's just a massive amount of money thrown in there, and everybody, not just the stimmies, the stimmies is a meme that, they're coming, they're going to be Robin Hooding it up, and they're going to go straight to crypto. Yeah, maybe. It's what happened in March, right? When last year, when they mailed them out. But we're just in this massive, if 25% more dollars are in the system, then the only thing we've really discovered is that there's no way to make any, if you own dollars, you're 25% poorer within just like that. So a lot of people have realized that. So you're in Bitcoin, then you take the blue pill, and you have, well, I guess that's not really, you take the orange pill, you get Bitcoin. Let's call it the silver pill. And you take Ethereum. And then you realize that, hey, I can do nothing and make 7 to 20% on these other assets. And literally, I mean, it's, Kraken's challenging as it is, but if you go to their staking tab, it's clean, it's simple, it's easy. Their main trading site's a little bit more challenging. I don't, sometimes you just don't know what you're looking at. But you get to their staking, you can do it on Coinbase, you can do it on Gemini. The average person has access to Coinbase to stake, or you could buy Bitcoin in PayPal, right? But ultimately, there's all these new on-ramp methods for that, an extra, was it $4 trillion to find its way into, some of it's finding its way into crypto, obviously. It's $1 trillion asset class is all. That's, slightly over $1 trillion, right? 1.7 trillion. Okay. So almost 2 trillion. So congrats, everybody.
Crazy.
Yeah. Bitcoin did, $1 trillion of it, but Ethereum's only 200. So the rest is a lot of, I'm looking at it right now. Tether, 41 billion. That's the third highest, biggest market cap. BNB somehow got in there, but you got Cardano, you got Polkadot, you got Uniswap, you got Chainlink, you've got Wrapped Bitcoin. Those are your top 15 market cap assets, and they're all $1 billion assets right now. And
I was going to
over half of them are DeFi.
Yeah, sorry not to interject. I was going to say, I'm just looking right now, and this is probably a first up to number 88 on CoinGecko I'm looking at, are over $1 billion market cap.
That didn't happen
insane.
in 2017.
That was not a thing. No, it was absolutely not. And wow, just looking at that tells you everything. And I would say there's probably only a handful of coins from the last run that are in the top 100 right now. If you just scroll, it's really just maybe 10 or 20 from the last run. I don't know. I could count, but it is interesting to see that. I see what we got: Cardano, XRP,
well, Bitcoin, Ethereum, Tether, obviously.
Yeah. We got to count those, but
yeah, XRP, Litecoin, Bitcoin Cash. That's pretty much it outside of Bitcoin, Ethereum, and Tether, right? Yeah, they're easily this cycle. Yeah, easily impressive.
Definitely. But that and that goes to your point. Like, you may even be able to chart, the top 100 right now very easily, because they're all trading at, like, honestly, like, very good volume. The volume of Bitcoin, I guess, would maybe be more than the stock market these days in some regards. I don't know. I was looking at the daily volume of the Nasdaq's only like 1 billion or so. I don't know if that's true. Somebody fact check me, but I was looking at that, and the 24-hour volume of Bitcoin is 54 billion, nearly 55 billion just today. And that includes all the pairs and everything and whatnot. So yeah, I mean, I guess bringing up selling is not the right point right now, but I was thinking a little more on that. And I take all my technical cues, at least for like the longer term trends, off of like a weekly or a monthly basis. So I assume you do too. Just for the longer term trends. So I'm looking for a breakdown on the weekly or the monthly, most likely, before I would consider exiting something.
Yeah. Well, and that's another really good point. You have two cohorts in this space. You have degenerate day traders and gamblers and all that, and we're part of that a little bit. But the amount of diamond hands in crypto like far exceeds anywhere else. Like there's so many. It's just they're just like, well, this is just the way it is. Like I hodl. I hodl. I store. I got it in on a Ledger Nano S or Nano, or Treasure, whatever. Like you got a hardware wallet. So not just that, but how much goes off exchange on a daily basis. I think I've seen it's like a burn down chart, where a burn down chart is, here's the stack of work you need to do, and then here's when it's all done. So it drops as you go along. So it's kind of like the opposite of a chart that goes up. So you're like, okay, we've got 1,000 things we've got to accomplish. And as you burn down that work, it goes to zero at the bottom, theoretically. And that's it's kind of like the only place in crypto where you're seeing a burn down chart actually exist, where it's like, all right, there's 20 billion of Bitcoin on this exchange, and it's just like going into hardware wallets. Ethereum is the only the ETH2 staking is, I guess, the most interesting part to watch on that, because I don't know how many people really take Ethereum off chain or off network compared to Bitcoin.
I mean, for me, just speaking from my perspective, every time I buy something on an exchange, I send it to my external wallet. I don't keep it on exchange. If I view it,
what I mean is, if you have Ethereum, it's a lot of it's likely going to like Aave, right? You're probably, in MetaMask or whatever, but I'm saying it's getting wrapped in something, or it's staking something. I think
it's being put to use, essentially. I mean, you got to use it for the gas fees. So, every time you do something, you're selling Ethereum. It's not great for the price, honestly. It's kind of detrimental, but we'll have probably more of a discussion next week on ETH. There was just honestly, anybody out there, there's a great 2-hour podcast, if you can sit through it, on from one of the core developers of Ethereum. His name is it's escaping me at the moment. Justin Drake, I think.
Yeah.
All right, but anyway, he's a very, very core contributor to ETH, and it's a very abstract conversation, but there are some good points to it. You don't need to be a super expert on anything technical. If you're, it's just pretty interesting. And he goes into more of, what the updates could bring for Ethereum, and then speaks on the kind of the economics of the ecosystem. But yeah, we can talk about that more next week. That's super interesting. Something to keep in mind. Hey, ETH can change, and that could be really good for ETH. So don't underrate it. I think I mentioned this. Yeah, I need to acquire some more ETH this week somehow.
After that podcast, I was like, ooh.
It's funny. It's funny too, like listening to stuff like that. And the emotions that go through your head immediately are just like, man, I need to get more. I need to buy more. And the way that the market moves is usually like 10 times slower than how your brain is thinking. So you're like, I need to buy, and then you buy, and you don't even really think about the technicals. Now I definitely don't do that as much, which has been great. So I'm mostly like, hey, what's the technicals? Okay, looking good, we can buy. That's my number one step now.
Yeah.
So
what is your gem of the week?
Yeah. So yes, this is one of my chasing alphabets. Very small, but it's a project called Radicle, Radicle. And it's a decentralized version of like a GitHub. Most people in coding are super familiar with GitHub. It's what most people use as a code repository. But one of the negative things about GitHub is Microsoft owns GitHub. So it's entirely centralized and controlled by Microsoft. And coding is very free and should be open and available to everybody. So Radicle is a place where, you can host your code. It's not controlled by anyone. And you can collaborate with people using the software. Right now, I mean, it has a lot of really good, like most people that are devs in the space right now are involved in this project, I'll say. So it's one of the reasons I'm interested in it. There's Bitcoin core code on there right now. If you're a coder and you want to take a look at that, there's Ethereum code. There's tons of code from some of the top DeFi blue chip products. You can invest in it. I'm in terms of like, okay, is this going to 10x Aaron? Hopefully, but also I also will put some capital towards something I just like. And, once you own some of these tokens in the decentralized world, they are now known, instead of like purely an ERC20, they are called gov tokens, governance tokens. So the fact that I own some, if something happens, to this project that I think is cool and I want to vote on that issue to get approved, I can now vote because I own some of that. And it's not all that different than common stock, but I almost want to think it's like common stock on steroids, because there's just so many more opportunities that you can get from like owning a good governance token in the space. You could get qualified for an airdrop or whatnot. But this is just a really cool project that I don't mind recommending to people, because it's honestly like, it's a good project. It's usable. I could see people using it. I mean, it's not even pumped. Like, I think it's like $13-14 a token right now. It debuted at $11.50 was the initial price, and it will probably defend that price for a bit, just because there's good people using it, and it's useful to the space. So that's my gem of the week. Check it out. If you're a coder, is what I would say.
Yeah, they got some good people. Go ahead.
No, I was going to say, or if you just want to invest, this isn't like a trade. I would say this is like, okay, I want to invest in this project for a year or something. I mean, and that's how I look at a lot of my projects. If I do a trade, I do approach it how Chris mostly describes it. I'm like, I'm going to look at the technicals. I'm going to look for a setup, and I'm going to buy. But yeah, Radicle, I'm not looking for the setup. I like the project. I'm investing for the long term there.
Yeah, narratives do drive a lot. Memes drive a lot of the market in crypto. So it's certainly something to take a look at. Yeah, IPO'd at 16, or not IPO'd, it went live at 16, and it's currently at 13, give or take. So interesting stuff.
Not much motion, but just seems like
Radicle.xyz, radicle.xyz is their URL.
Exactly. And yeah, if you're a coder, you want to get into the space, they got all your needs. They can get you up and running.
I like it. Like it. All right. So my gem of the week, well, I got two, because it doesn't say gems of the week, but whatever. First thing is I bought my first NFT. The artist, I had commissioned a sculpture from this an artist up in Calgary who has a 14-foot metal iron bent, welded, and whatever tree in the middle of the city of Calgary. He's been commissioned by a couple of those. And so we wanted to have a similar type tree in our house. We have a nice little space. and a son. And so he put a little door down in there for my son to store things in there. It's called a treehouse. Anyway, it's super cool. Before, NFTs really took off, and, I'd been talking to him for years saying, do some Bitcoin art, or, there's like, you're going to want to be in the crypto space. There's so much money, and people are always looking for places to spend their crypto. If they're going to, they would prefer to spend that or something. So I said, just go that. Finally, he got into the NFT buzz, and I sent him a link and I said, check this out. Right before Beeple did his $69 million sale. And shout out Beeple, if you want to get on the podcast, hit us up. But it was before then, and he got really excited, and then that thing would happen with Beeple, and he's like, let's go over this again. So we did the transaction he minted it, and we did it. This is a guy who just, works with iron all day long. He has an iPhone, he has a tablet, and that's kind of his business. He doesn't really have a computer. He doesn't really get involved in that, but he minted it. He went right to it. We bought it. I think it's a pretty cool piece of art. Not only do I own the physical art, but I own the digital, which is kind of cool. And that was the first thing. I hate how the NFT space is right now. It's so annoying that every podcast is NFT. But whatever, good on everybody who's doing good. But really, the big gem of the week, Pomp's podcast I listened to this morning. He interviewed Jim Cramer from CNBC, the buy guy, right? He aped into Bitcoin at $12,000 with $500,000. So he put $500K to work when Bitcoin was at $12K. Currently, let's call it, that's 5x from there. So $500,000 to $2.5 million, give or take, I guess that would have been in October. So what, 5-6 months? Could you imagine just, here's $500,000. Oh, now here's a couple million.
I mean, you give me that, maybe I 10x that for you. So
give Aaron a call.
Give me a call. No, I'm just kidding.
Hit up Derek on his Twitter. He's that's the spot.
That's impressive, because Cramer gets a lot of shit, I would say, in lack of a better term there.
For sure,
for being such a retail guy, and he's easy to hate on. But numbers don't lie. We got to give a fist bump to Jim Cramer today or whatnot.
Alarm just went off.
Jeez.
Hold on. Audio issues. All right, we're back. I think.
Yeah, but
say something for me. I can't hear you. This is so dumb.
Okay. Like, I can hear you.
All right, we're back. Yeah, I have an alarm to go off. I can hear you now. I have an alarm to go off 5 minutes before
the
New York close.
Yeah, I was about to say, it's got to be important if you got an alarm for it.
It's the only alarm I have, Monday through Friday, 12:55 p.m., just so that if I have any trades on or anything that needs to be paid attention to. I agree. Cramer gets really hated on. He came on Pomp's episode, Pomp podcast. It was back in October. I think September, October, somewhere around then. And he was just like, tell me this Bitcoin stuff. Tell me about the stuff. And Pomp just, does what Pomp does. And Cramer, so he came back on today to say, hey, yeah, I'm in. So he went out the next day and he put $500,000 to work just on Bitcoin. And he's just like, you convinced me. You broke it all down. He was a big gold guy before, and he was like, 10% of your portfolio needs to be in gold. And I guess, so he had $1 million in gold apparently, and he sold half of it and bought Bitcoin with it. And now he's well over that.
Imagine if you sold all of it, sold all that gold.
That's right. Well, it was all his family trust too. So he did it for his kids. He thought, and it was cool. The whole episode, the original, was him talking about, I think about this sort of things with preserving wealth. Do I buy art? Do I buy real estate? And gold has always been that preservation. And, Pomp just kind of like said, look, man, this is what gold is. This is what you want gold to be. It just is what it is. This is how it is. It was pretty great. Anyway.
Yeah. I mean, it's funny, like how when I heard about Bitcoin, I mean, like, that's how I was like, oh, you're telling me there's only 24 million of these things. Like, why would I not want to own one? Sounds like gold to me. Sounds like new gold, essentially. So yeah, shouts out Pomp, Blockfi, who else? Kraken. Shouts out all of you guys. I think we've had a good discussion, and we're ready for this next week. Hopefully the markets start to find direction, I guess.
Yeah, right now there's a couple of names that are starting on the DeFi names that are starting to move, but otherwise, yeah, it's just been a big sideways market waiting on nothing. Shout out Bankless Podcast. Let's not forget them.
Shout out Bankless. So we'll just wait for the market to find direction, and happy trading. Happy trading, everybody.
All right, we'll be back next week with a little bit better version of it each week. We're going to continue to improve. Hit us up. You got at Crypto Derek Z on the Twitters. And you've got at Chris D Macro on the Twitters to reach out. Go to pollinatetrading.com to get connected to the lab if you really want to get in with these crazy, wild, incredibly smart traders. And that's about it.
Yep. Well, thanks, Chris. And we'll be talking next week.
Next week it is.